Hello, it is Wednesday, the 20th of August, 2008, and this is Brian Shannon from Alpha Trends. We've got the market closed here, and it was a pretty choppy day, but at the end of the day, S&P 500 did manage to close 73 cents higher on the spiders, or half a percent higher. We are still below a declining 50-day moving average, though. That gives us reason for concern, and we remain below the levels that we had just broken down from, which is coincident with about that 20-day moving average as well. So when we take a look at the shorter term time frame, we'll start with the 10 minute here. You can see that that level is right around 128. As I posted intraday today on the blog, that basically you can't take the long side seriously until we can get back up above 128. We do still have this 5-day moving average declining. That puts the odds against a recovery here. And looking at the 30-minute time frame, again, we've got an important trend line that was broken here just 2 days ago, and now we've got an established pattern of these lower highs and now these lower lows in here. So our support held down near the level where we were looking for it potentially to come in, which was about 126.5 right here. Now it looks like we're range bound a little bit here for the short term at least, 126.5 to 128. Actually, even I'd say go as high as about 128 and a quarter, because it's going to need to clear that to really be able to hold on. But it was pretty impressive that the market held on as good as it did when you consider that Freddie Mac and Fannie Mae just continue to get destroyed in here, and those just continue to be, a destroyer of wealth for most people in there. So stay away from those types of stocks unless you're going to be trading them intraday. There's a lot of volatility and huge volume in those stocks. And they are shortable. I was shorting Fannie Mae in there for a little bit today, so that worked well. But 125 is the next level of potential support if this 126 and a quarter or 126.35 area fails to hold. And we are in a primary downtrend when you look at the weekly time frame, the daily time frame. We've got mixed signals with these moving averages crossing, but with a declining 50-day moving average, again, you want to look at this market as guilty till proven innocent. Interestingly, I mean, there's a lot of strength still in this market in certain areas too. A couple of weeks ago when LDK reported earnings, that set off a rally in that stock that spilled over to a lot of these other not internet, but rather solar plays, STP today, TSL, even little companies with bad charts like ASTI and JASO. What I'm going to do later today is create another video with some other ideas in that alternative energy area that I think have the potential to continue. And I'm going to post that to the bonus tab of the book site at technicalanalysisbook.com. So if you purchase the book, again, on page 184 is the username and password. Please remember to use lowercase when logging in. I accidentally typed them in uppercase in the book, but lowercase is what works for the username and password there. The IWM came down to the important level that had been resistance here at about the 72.5 area, was tested yesterday and held again today. That's also coincident with this 20-day moving average. So right now you've got to be encouraged that the market holds up here after being rejected from that 76 level, where we have that bigger area of prior support here on the weekly time frame. Just as a quick reminder of the significance of that level, we are still remaining above the 50 and the 200-day moving average. The 50-day moving average is flattening out, so this remains the stronger group, but there's of course reasons for concern when we've got it's such a fragile overall market environment like we're in here. So when we take a look at this 25 to 72 and a half level, this is the important level where the market did probe and hold today, but we've got a declining 5-day moving average. We've broken this uptrend here. We've got what's looking like the lower high in here. This level is going to be important along with that 5-day moving average just below about $74 a share. Still reason for concern in here. If this 72 breaks, then we're probably headed down towards that $70 level, and like I mentioned I think yesterday, that could do some some pretty important psychological damage to this market. Impressively, the financials got below that 1975 level and held. And I say impressively because again, these Fannie Mae and Freddie Mac were down so big, but it didn't scare people away basically from buying these up towards the end of the day. Here you see that the financials finished as a group right on their high as measured by the XLF. Obviously, Fannie and Freddie probably aren't very heavily weighted in this particular benchmark of the financials, but we've got this 1975 level holding for now. We've got a declining 10, declining 20, declining 50-day moving average, and it still looks pretty ugly for these financials. So don't think that it's time to go into them just because they hold up for a day. We've got a declining 5-day moving average. This little level of support acting as resistance right now in the short term. That's at about let's take a look here, $20 and let's just call it 2035 or so. But the 5-day moving average is declining. That tells you just be very careful in here. It's a tough group, I think, unless you're going to be an active trader, and I've said that the last couple of days, so no need to repeat myself there. Oil seems to be stabilizing just a little bit in here right now. You can look at this daily time frame and see the range that it's basically 93 to 94. Next potential level of resistance right up there. Let's take a look at the 30-minute time frame to get a little better perspective on that. We can see that we've been in this, we've had this downtrend that broke, and now we're kind of toying with this level right here, which is, again, let's just change the scaling in there, about 94.5 or so, and then the next level of potential supply should be released up here, and then up near about 103 or so. So there's still a lot of damage that's been done in this market. The 5-day moving average is flattening out, so perhaps getting above this level here at about 94.80 or so, then we're looking at a little inverted head and shoulders pattern and something that could lead to a push up to the next level, which would be right around here near 79.5. I wouldn't suggest playing it on the upside, but if you have a different tolerance for risk and like to trade counter to the primary trend, which is represented by that declining 50-day moving average, then it might be a good higher risk play if that's what you're interested in. The Qs were up 8 cents today. They continue to hold above that 200-day moving average for now. We've got a rising 10 and 20-day moving average. 50 days still declining, so we want to be overall cautious in here. The key levels again are right down here at 46.10 or so. But before we get to that, and here's those lines that I left in from yesterday. So now we see a lower high. So 47.50 is going to be 47.50 to 47.75. If it can get back above there, maybe this market could heal itself. But right now, you've got to give the benefit of the doubt to the sellers with that declining 5-day moving average, and the pattern of lower highs and lower lows suggests that it ought to continue to trade lower. This level here from early August was tested yesterday and again today. Seems to be holding as a level of support for now, and let me clear that up. That's right about in here at about 46.75 or so. So back below 46.75, then I think we're headed for a test of this area down near about 46.10, 46.20, and that's what odds would suggest in here with the declining 5-day moving average. It remains a tricky, volatile market, and we're seeing a little bit of stability in here, but these little corrections through time tend to resolve themselves in the direction of the more prevalent trend on this time frame, represented by the 5-day moving average, which is obviously lower.